Welcome to Course Dunia.
If you want to prepare the journal book, there is a procedure. So from that procedure only, we need to be prepared that. If you want to prepare the journal book, first we should have the transaction. That means a work. We should have it, and this work should be financial. That means it should be related to the money. And second one, after having the transaction, we should find out account or ledger. We should find out account or ledger. So after finding the ledger, we need to match the principal. We should match the principal. After matching the principal, the final step is recording. So this is the process where we can easily prepare the journal. If you want to work with the journal book, definitely we should follow the principle, which is called as there are the different names. So mostly, like we call it as golden rules of accounting, golden rules of accounting, or accounting principles. Accounting principles. So the accounting principle. Accounting principle has been divided into two types. The first one is personal account, and second one is impersonal account. Again, impersonal account has been divided into two types. One is the real account, and second one is the nominal account. Three principles which will be used for the entire accounting concept. And previously has been mentioned that accounting will be works on double entry system, debit and credit. The same, each and every account will have the two principles. One principle is for debit and one principle is for credit. But before going to explain about the principle, coming to the personal account. Personal account always related to the name. Personal account always deals with the names, whether it is a person names or artificial names, anything. The transaction have the name, then it will be comes under personal account. And coming to the real account deals with assets. Real account deals with assets, whether it is a current assets or fixed assets, any type of assets will be comes under real account. And all other remaining informations will be comes under nominal account. Let's go to the principle one by one. First one, personal account. So I'm simply writing DR, debit. When there is a persons or name persons, what will be happen? We'll have the receiving and giving, right? The same will be comes to the personal account. Like debit, the receiver. The same will be comes to the personal account. Like debit, the receiver. those who are receiving, it's a money or it's a product, anything. If he is a receiver, he should be debited. If he is a giver, he should be credited. Debit the receiver, credit the giver. This is the principle of personal account. And next, coming to the real account. So real account principle, real account means related to the assets. Assets means coming and going. So debit what comes in, debit what comes in, and credit what goes out. So whatever the asset is coming to the company or coming to the business, whatever the asset is coming to the business, it should be debited. Whatever the asset is going out of the business, it should be credited. This is related to the real account principle. All expenses and losses, credit all incomes and gains. So this is the principle of nominal account. All other like expenses, losses, income, gains, everything will come up. These three accounts is the main accounts. So that's why this will be called as the accounting principles or golden rules of accounting. So let's go with a quick example. Cash deposited in Indian Bank, 10,000. This is the journal entry. This is called as the journal. So both are different. In the journal, we are going to enter journal entry. Come to the example, the process. What is the process? First, we should have the transaction. So we have the transaction. Second, we should find out the accounts or ledgers. It's represent the work. So it will be not comes any account. Indian Bank, artificial name, name of a bank. So we have the two accounts. One is a cash account and second one is a Indian Bank. First one, cash. Cash is a current asset. It's a mobile asset. So in the principle, assets means it will be comes under real account. So what is the real account principle? Debit what comes in, credit what goes out. And while preparing the journal entry, you should always remember that we are the company, not partners, not stakeholders, not accountants. We are the company. Okay. So here we are depositing cash in bank. So cash is coming to the business or going out of the business means definitely it is going out of the business. So what we should to do? Cash should be credited. So cash should be credited. Done. Next, coming to the Indian Bank. Indian Bank is artificial. As per the principle, name is it will be comes under personal account. What is a personal account? Debit the receiver, credit the giver. So here bank is receiving. So we are giving the amount. That means obviously the bank is receiving. As per the principle, the receiver should be debited. So debit Indian Bank. Now we need to be enter the journal entry. What is the entry? Indian Bank account data, first line completed. So we are I have been mentioned the ledger name. Account data is a common, and I'm starting the credit one, and it should be middle of the first line. So two, what should be entered in the credit? Cash. To cash account. Narration being cash deposited. Narration is your choice, but always it should be started with being. And we should write the amount, right? So we are going to enter the amount. How much? 10,000. It's only for debit. Again for credit, we should write this. So here today I'm going to record. So 24th November 2023. Indian Bank account data to cash account being cash deposited. And the debit amount should be entered in the debit column, and the credit amount should be entered in the credit column. That is, what is the difference between the journal entry, and journal entry? So now we'll explain what is the difference between these three accounts. First one, journal. A journal in accounting is a record or a book where financial transactions are initially entered in chronological order. So journal means nothing but a book where we need to enter all the financial transactions. What is a journal entry? A journal entry is a formal accounting record that captures the financial effects of a business transaction. So that means it's a formal accounting record. That means the process, sorry, the format, how to record the journal. In the journal entry, we'll understand that how to prepare a journal by using the transaction. And finally, journalizing. Journalizing is the process of recording financial transactions in the journal. The process, how we are